Good morning, students. In the last class, we discussed with the generally accepted accounting principle. Just to have an idea about that one, or a clear idea that the principles that is to be adopted for preparing the financial statements by the accountants all over the world. That is the generally accepted accounting principle that we see yesterday's class. So, uh, what we need to see is what are the principles or the what is the feature or what is actually this generally accepted accounting principle. So for that purpose, I'm going to share the same with you. So we will look into that. So in the last class, we see the accounting principles, the rules, the conventions, the procedures that are to be adopted by the accountants globally, all over the world. That is, for recording the transaction and also preparing the financial statements of the different types of the organization are called generally accepted accounting principle. So, what are its features? So, what are the features with regard to such an accounting principle? That means it is a man-made thing. Accounting principles are man-made, so they are not as authoritative as natural science. മനുഷ്യ നിർമ്മിതമാണ്. അതായത് debit what comes in, credit what goes out. That is the one principle. Dual aspect concept. Okay, double entry system. Then materiality principle. Consistency is there, isn't it? Then separate legal entity. All these are man-made, so that they are not as authoritative as a natural science. So that is, it is a man-made thing. Then in the process of evolution, so accounting principles are not in the finished form. They are in the process of the evolution or the developing stage. ഒന്നെങ്കിൽ അത് ഡെവലപ്പ് ചെയ്തുകൊണ്ട് വന്നിരിക്കുന്ന പ്രൊസീജിയർ ആണ്, അല്ലെങ്കിൽ ദേ ആർ ഇൻ ദ പ്രോസസ് ഓഫ് എവല്യൂഷൻ. So that is the case. Accounting principles are not in the finished form. അതായത് ഓരോ ഇതിൽ നിന്നും പഠിച്ച് പഠിച്ച് അപഗ്രഥിച്ച് വരുന്ന കേസുകളാണ്. ഓക്കെ, സോ ദാറ്റ് ഈസ് ഇൻ ദ പ്രോസസ് ഓഫ് എവല്യൂഷൻ. ദെൻ യൂണിഫോമിറ്റി. Accounting principles are developed to ensure the uniformity and understandability among the accountants all over the world. So that is the case. Uniformity, ഐക്യം. ഓക്കെ, ഒരു പ്രിൻസിപ്പിളിന്റെ കണ്ടിന്യൂവേഷൻ ആണ് മറ്റൊരെണ്ണം, അതാണ് ഓർക്കേണ്ടത്. സോ accounting principles are developed to ensure the uniformity and understandability among the each and every accountants all over the world. Then generally acceptable. All are accepted by this principle. That is the case. Generally acceptable for all the users of accounting. Okay, so accounting principles are generally acceptable to the users of accounting information also. And also these are not rigid, means they are changeable, flexible. അയഞ്ഞ ഒരു സമീപനമാണ്. എന്തെങ്കിലും ചേഞ്ച് ചെയ്യണമെങ്കിൽ they need to change that one. So that is the case. So it is a man-made thing. It is in the process of evolution, uniformity, generally acceptable principles, and also not rigid. Then classification of accounting principle. Next we are going to see that one. So what are the accounting concepts and accounting conventions? Two things are there in accounting principle. That is, accounting concepts are there and also accounting conventions are there. So what are the accounting concepts? What are the accounting conventions? We will see in detail each and everything. So accounting concept, one is the business entity concept, money measurement concept, going concern concept, accounting period concept, accrual concept, matching concept, dual aspect concept, cost concept, and revenue realization concept, and verifiable objective evidence concept. So accounting concepts are business entity, money measurement, going concern, accounting period, accrual, matching, dual aspect, cost, revenue realization, and verifiable objectivity or objective evidence concept. While conventions are materiality, consistency, conservatism, full disclosure of the facts, timeliness, and industry practice are there. So we keep it in mind, very important this one, generally accepted accounting principle and what are its concepts and conventions. So concepts 10 is there and conventions 6 is there. So once again, accounting concepts are business entity concept, money measurement concept, going concern concept, accounting period concept, accrual concept, matching concept, dual aspect concept, cost concept, revenue realization, and verifiable objective evidence concept. While conventions are materiality convention, consistency, conservatism, full disclosure, timeliness, and industrial practice. So we will look into in detail one by one. Accounting concept. So very important, keep it in mind this one. So just to have a clear-cut idea about the need to get a clear-cut idea about this thing. So what are accounting concept? Concept means the idea or the notion which has a universal application. Accounting concepts are the assumptions on the basis of which the financial statements of an organization are prepared. So we need to prepare the financial statements. Based on these concepts, we are preparing the financial statement. So based on this, the guidelines given by the concept, we are preparing the financial statement. So following are the important concept. One is business entity concept. It means what? It is separated from an entity. So distinct from its owners. Owners ആണേ പോലും ഓണർ ഉണ്ടേ പോലും it is a separate legal person എന്നുള്ളതാണ്. So that is business entity concept. അപ്പം in simple sentence or in a single way at a glance, what is a business entity concept? It means separated from its owners. Owners in കാര്യം ഓണർ ഉണ്ടേ പോലും there are enough people there. Joint stock കമ്പനിയിൽ അങ്ങനെയല്ലേ 20 plus people are there. So that is the case, business entity concept. So a business firm is distinct from its owner. The transactions of the business are recorded in the books of the firm and not in the books of the owner. ഓണറുടെ ബുക്കിലല്ല ഫേമിന്റെ ബുക്കിലാണ് ഏത് ഇടപാട് വന്നാലും that is to be recorded. Therefore, business is treated as an entity different from the owner. The owner is considered as a creditor for the capital that is invested in the business. ബിസിനസ്സിൽ ഇൻവെസ്റ്റ് ചെയ്തിരിക്കുന്ന ക്യാപിറ്റൽ മൂലധനം അത് ഒരു ക്രെഡിറ്ററിനെ പോലെയാണ് ആ ഒരു ഓണറുടെ കേസ് എടുക്കുമ്പോൾ എന്ന് പറഞ്ഞാൽ ഒരു കടക്കാരൻ എങ്ങനെ കൊടുത്തിരിക്കുന്നു ആ രീതിയിലാണ്. സോ ഓണർ ഈസ് കൺസിഡർഡ് ആസ് എ ക്രെഡിറ്റർ ഫോർ ദ ക്യാപിറ്റൽ ദാറ്റ് ഈസ് ഇൻവെസ്റ്റഡ് ഇൻ ദ ബിസിനസ്. The owner's capital is the obligation of the business and it has to be paid back to the owner in the event of business closure. ആ ബിസിനസ് വിറ്റഴിച്ചാൽ or ക്ലോസ് ചെയ്താൽ the owner need to get the capital invested. അതാണ് ഓർക്കേണ്ടത്. That is why he is acting as a creditor for the amount invested. Clear? So that is why business is treated as a separate legal entity or distinct from its owners. It is a separate person. So that is the treatment with regard to money measurement concept. Sorry, business entity concept. So business is treated as distinct and separate from the individuals who own or manage it. On recording the business transaction, the effect of the transaction on the business and not the owner is considered. In the absence of such a concept, the affairs of the business will be mixed up with the private affairs of the owner and the true picture of the business will not be available. So in detail, what it denotes, business is separated from its owners. That is, owner is simply a creditor for the capital invested. Apart from the owner, this is a separate person itself. So that is why the transaction of the business are recorded in the firm's book, not in the owner's book. So that is the first thing, business entity concept means separate from the owner. This is a separate legal thing. Which one? The business. So clear? Hope you understand business entity concept. While the second is money measurement concept. From the name itself, what is that? Measuring the money. Only monetary transactions are recorded. That is the case. Simple sentence, this is the one. So only those transactions which can be measured in terms of the money are recorded in the books of accounts. Hope you are clear now. Transactions that cannot be expressed in terms of the money are excluded from the books of accounts or books of the business. If there is monetary transaction, it is recorded. That's money measurement concept. Then going concern concept. It means what? Business is separated from its owners and also it is a going concern, continuous thing. ഇന്ന് തുടങ്ങി നാളെ അവസാനിക്കുന്ന ഒരു സംരംഭമല്ല ബിസിനസ് എന്ന് പറയുന്നത്. n number of years it may going, continuing. So that is going concern concept for an indefinite period. Clear? So that a firm will continue its operation for an indefinite period of time. It is not likely to be liquidated in the near future. It has an indefinite life also. Means I am telling the content only, just to read the other things. Okay. So I will share the thing. So just to read that. So now three things. Business entity means separated from its owners, means a separate person other than the owner. And the owner is treated as a creditor for the amount invested in the business. And the recorded transaction should be in the firm's books but not in the owner's books. That is the case with regard to business entity. Money measurement means all the monetary transactions are recorded in the books of accounts or the books maintained by the firm. Non-monetary transactions are excluded from that. Clear? Going concern means what? It is for the indefinite period of time, not for two days or 1 month like that. When the business is there, continuous period is there, we need to prepare the books of accounts or other all the things till that period. If it is closed, then finish that one. So it will not be closed in that way. It is for an indefinite period of time. So that is the third point. So business entity, money measurement, going concern. Next, accounting period. So there should be a period. Period is there. Accounting period concept. It means what? There should be an accounting period so that the financial position need to ascertain or need to check in that period. So in India, the accounting period for the business is April to March, while in other countries, means mainly in Gulf countries, it will be Jan to December. So that is the case. A business concern is assumed to have an indefinite life period. Measurement of the income and financial position after a long period will be of no use in making the corrective action at the right time. So, life of the business is divided into short time intervals called accounting periods. Maybe 1 year. ഒരു വർഷം ഓരോ വർഷവും we need to check the financial position. That is, 2 വർഷം കൂടുമ്പോഴല്ല ഓരോ വർഷവും നമ്മൾ ഇത് ചെയ്യേണ്ടതാണ്. That is the case accounting period concept. Then accrual concept. Accrual is what? Both business transaction consist of both the cash and the credit transaction. In credit, receipt of payment of the cash may be made in future day. Amounts receivable or payable on account of the credit transaction are called accruals. കൂട്ടി വെച്ചിരിക്കുന്നത്. Okay? So the amounts receivable കിട്ടാനുള്ളതോ കൊടുക്കാനുള്ളതോ on account of the credit transaction. കടത്തിന് സാധനം മേടിച്ചിരിക്കുന്നത്. That is the accruals. To ascertain the correct profit or loss, all the expenses and the incomes relating to the accounting period, whether the cash has been paid or received or not, have to be considered. That is the case. Accrual concept means add up the thing that whether to receive the money or to pay the money, whatever be the case, we need to add it up. Total debtors means what? We need to get it. Or total creditors. Okay, like the same. So that is the accrual concept. Then another one is the matching concept. So as you are aware about the debit and credit aspect, so the revenue should be matched with the expenditure, isn't it? So then only the profit will be ascertained. If the revenue is high and the expense is low, that it denotes the profit and vice versa. That is the matching concept. So the expenses of the each accounting period should be matched with the revenues that of the accounting period. അതായത് വരുമാനവും ചെലവും തമ്മിൽ മാച്ച് ചെയ്തിരിക്കണം. Then only we need to identify the financial strength or the weakness of the firm. That is the case with regard to matching concept. So we see what all concept now: business entity, money measurement. Then third one is what? മൂന്നാമത്തെ എന്തായിരുന്നു? Going concern means continuously. Then fourth is accounting period. Fifth is accrual. Then matching concept. Next is dual aspect concept. As you are aware that there should be a debit aspect and a credit aspect, isn't it? So, excuse me, both the debit and credit aspect of all the transactions should be recorded. Means where there is a debit, corresponding credit will be there. അതാണ് ഡ്യുവൽ ആസ്പെക്ട് കൺസെപ്റ്റ് എന്ന് പറയുന്നത്. സോ ഒരു ഡെബിറ്റ് വന്നാൽ അതിനൊരു കറസ്പോണ്ടിങ് ക്രെഡിറ്റ് ഉണ്ടായിരിക്കും. Isn't it? അതാണ് that is the dual aspect concept. So the relationship of the assets, liabilities, and the capital, that is to be termed as the accounting equation that you, or the balance sheet equation that you see in the previous classes, isn't it? Therefore, asset is equal to liabilities plus capital, and capital is equal to asset minus liability, or liability is equal to capital minus asset, like that. Clear? So that is the dual aspect concept. Then that is, there should be a corresponding credit for each and every debit recorded. Then Next, cost concept. Cost concept in the sense means what? The cost of each and every transaction should be recorded. So transactions are recorded in the books of accounts at the price at which they are recorded. Accurate. ഏതിനാണോ മേടിച്ചത്, ഏത് പ്രൈസിനാണോ സാധനം മേടിച്ചത്, കോസ്റ്റ് പ്രൈസിനാണെങ്കിൽ that cost price to be recorded. അതാണ് cost concept. Cost consists of the cost of acquisition of the asset, means purchase of the asset, and the expenses incurred in bringing the asset to the intended condition and the location of the use. Cost is the basis for all the subsequent accounting of the transaction. The value of an asset is to be determined on the basis of the historical cost. So that is the case with the cost concept. Then realizing the revenue realization concept means what? Like the same expenses is incurred, the revenue to be generated from the sale of the goods or the services rendered, that is to be checked. എന്തുമാത്രം വരുമാനം ഓരോ കേസിലും നമ്മൾ ജനറേറ്റ് ചെയ്യുന്നുണ്ട് എന്നുള്ളത്. So revenue is earned at the point of sale when the title to the goods passes from the seller to the buyer. ബയർക്ക് വാങ്ങിക്കുന്ന ആൾക്ക് ഓണർഷിപ്പ് അല്ലെ ടൈറ്റില് പാസ് ചെയ്യുമ്പോഴാണ് the revenue to be generated. Only those revenues which have been realized in cash or resulted in some legal obligation shall be recorded. Likely, the sales or anticipated revenue shall not be considered. So that is the case. Revenue realization concept means realizing the revenue aspect. Then finally, verifiable objective evidence concept. So we are recording each and every transaction. This is treated as what? The evidence for the future course of action. If a case a dispute variga, we need to show that this transaction is incurred or not. Based on that, we need to appear the same before the court of law so that we can escape from that case. So that is the case verifiable objective evidence concept. Accounting records and data in the financial statement should be capable of verification supported by objective evidence. Documentary evidence of transactions that are capable of verification must be made. It ensures credibility, reliability, and dependability of the recorded data. അതായത് നമ്മൾ മസ്റ്റ് ആയിട്ടും എന്ത് ചെയ്തിരിക്കണം? Those transactions are incurred, that is to be recorded at the same moment. Otherwise, if we omitted, there should be what? One thing, it is not an evidence also. It is not a proof also. Another thing, profit will be not correct. Incorrect profit will be there. Isn't it? ഇത്ര എക്സ്പെൻസ് ഉണ്ട്, നമ്മൾ കുറച്ച് എക്സ്പെൻസ് വിട്ടുപോവുക. We are not entering that one. So, what is the issue? It ensures the credibility, vishwasita, reliability, and the dependability of the record data. So therefore, invoices, vouchers, receipts, bills, cash memos, bank statement, and physical verification of the stock are examples of objective evidence. എല്ലാ തരത്തിലുള്ള documents we need to prepare for the each and every transaction to be entered. That is the case verifiable objective evidence concept. So these are the concepts with regard to which one? The generally accepted accounting principle. That is business entity, money measurement, going concern. Then what is the next? Accounting period, accrual, matching concept, that is revenue to be matched with the expenses. Then dual aspect, cost concept, verifiable revenue realization concept, and verifiable objective evidence concept. So hope you understand this one, accounting concepts. Just read it. I will share the thing also, and we need to check the convention in the later classes. So please have a look at today's topics, and please clear off your doubts as and when occurred, and also please see you the video once uploaded. Thank you for the day.